Vikram Limaye, Managing Director and Chief Executive Officer of IDFC joins us now. Vikram, good morning and thank you for joining us. Vikram, let's first start with the big picture. And the big picture is that a new regime has taken over. A new administrator is now running the country. But a little over 2 months into the new regime, nothing big bang has come from New Delhi. Is that disappointing?
No, I don't think we should judge the government's performance in a 3-month time period. There's a lot that's happened in these 3 months, and obviously the new government also has to get a proper understanding of the issues before they can start taking decisions on important matters. So I think it's early days. I'm quite optimistic that over the term of this government we will see progress and we will see growth picking up. I think expectations of markets and of investors and of various people in the landscape, including the common man, are probably unrealistic and exceedingly high, which the government will obviously have to manage so that they take the country along in terms of what it takes to bring the country back to a 7-8% growth path. But there are various complexities in how you sort out some of these issues. So I don't think you can expect results overnight. Everybody is working exceedingly hard, and I think the results of that will be seen over the course of the next few months.
Vikram, hi, morning. Good to chat with you. As someone who monitors, the ongoings of the industry so closely, the big topic yesterday, the Supreme Court stating that all coal blocks awarded since 1992 are illegal. What's your view on that? And do you see the Supreme Court stance on coal blocks impacting power projects, industrial activity, as well as financial institutions who've lent to these companies heavily?
Well, I mean, the Supreme Court's judgment is certainly something that is based on law and based on how the contracts were written and whether due process was followed or not. So obviously we have to respect their view on how these resources have been allocated. My hope is that when they reconvene on the 1st of September, that this will be thought through holistically in terms of the impact of cancellation of the coal blocks and what it means for various industries, whether it's steel, power, etc. I think it's early days to say which way this would go. I think it's quite clear that going forward, the way resources will have to get allocated will have to be done in a more disciplined way, and that's good for the country. I think we have to look at it from a long-term perspective. It will be disruptive, there's no doubt about that, and depending on how it is handled, it could be more or less disruptive. So we'll have to wait and see what emerges on the 1st of September. But certainly this is something that a lot of people were actually expecting, and the issue really is that if these blocks do get cancelled, what does it mean for plants that are currently operating? What does it mean for plants that had built in certain economics from captive blocks in terms of the end use of that resource, whether it's power or otherwise? And what does it mean for all the investments that people have made in some of these areas, including in developing some of these blocks, and some of them are actually at fairly advanced stages of development and approvals, etc. So I think it's very hard to make a generic comment because there are various blocks that have not even been developed. There are some operating blocks and there are some blocks that are very close to becoming operationalized. And I think how you handle the landscape is quite complex because of the nature of what I've just described. It will therefore require some careful thought in making sure that it doesn't become exceedingly disruptive.
Fair point. Till the time clarity does not come on 1st of September, it's difficult to find the material impact on some of these companies. Having said that, Vikram, financial institutions have a large exposure to some of these power companies. The minute these power companies were allocated coal blocks, they went to financial institutions, they went to banks and they raised money. If these blocks are actually cancelled or deallocated, will that be a sore point, a trouble point for the financial sector per se?
Well, as I said, it really depends on what happens after the blocks are cancelled. So there has to be a framework that has to be thought through in terms of how these plants, whether it's steel or whether it's power, etc., are going to be provided coal. and what the mechanism for that is, what the price of that is, and what it means for certain contracts that some of these companies may have entered into in terms of supply of power or the end product pricing, whatever that might be. So, like I said, there will be an impact depending on what the framework is post the decision of the Supreme Court. If it decides to cancel all these blocks, then there has to be a mechanism that is thought through in terms of how some of these entities are provided with the raw material for power or for steel or any other purpose. I don't foresee a situation where the blocks are cancelled and there's no coal available to anybody in the country and everything just comes to a standstill. I hope that's not the situation. If we go down that path, then obviously it would be exceedingly disruptive, not only for the financial system but for many other industries that are dependent on coal.
That's going to be quite a disastrous situation if that were to happen. But Vikram, you recently stated that your provisions are going to remain high going forward as well. What kind of credit cost can one expect from IDFC? And where do you see your gross NPAs settle down, say, over the next 2 to 3 quarters? Can we expect any improvement, or are they going to continue to sort of, be weighed down?
No, as we've been saying for some time, in fact even last year we had guided towards higher NPAs, but we didn't end up at the levels that we had indicated. I would still say that NPAs will certainly move up. We're currently at only 0.5 or 0.6% NPA levels, which are very low relative to all the risks that exist in the environment. We cannot be immune to all those risks, and therefore we have said that our NPAs will go up over the next 12 months, and I would maintain that guidance. In terms of provisioning, as I've said before, the objective of creating adequate cushion also has to do with the fact that we're transitioning to a bank which is expected to be operationalized in October of next year, and we just want to make sure that we create enough cushion against all the uncertainties and risks that we are aware of today. What we don't want is a situation where we have to make large provisions in the first year or two of becoming a bank, because that just becomes very disruptive. We would rather provide against those uncertainties today and then be in a situation where hopefully we will be able to write back some of those provisions if those uncertainties to evolve in a different way and actually get sorted out and there's resolution. So as we have said before, for instance, one of the areas that falls into that type of uncertainty is gas-based power plants, where even today there is no clarity on how those power plants will become operational and what the price of gas would be, what quantum of gas would be supplied, etc., etc. So in the event that we don't have clarity surrounding all those issues, either we can wait for another 2 years and then decide what provisioning needs to be made, or we start providing against those uncertainties today. And we would rather do the latter than the former, so that the bank is completely ring-fenced against known uncertainties for which there is no resolution available today.
So broadly, what is your total exposure, gross exposure, not net exposure, to some of these gas-based power plants?
This is something that we've put up on our website for the last couple of years now. In the aggregate, I think it's close to about 2,500-3,000 crores.
Okay. I'd like to draw your attention to your road exposure. A lot of road builders are in the process of deleveraging their balance sheet. Some are raising fresh capital, some are looking at selling some of their existing assets. Are you getting a sense that the road business is finally picking up, and will that benefit IDFC going forward?
It's not yet picking up. What I would say is that there is certainly an expectation when you talk to government and NHAI and developers that activity in roads will pick up in the second half of this year. A large part of that will be through EPC contracts, not BOT contracts. Out of the total number of kilometers that is expected to be bid out, etc., almost 60-70% is likely to come from EPC contracts, and the balance from BOT contracts. But that is certainly one of the sectors that will pick up first out of all the infrastructure sectors. The other area where we expect activity to pick up is ports.
Okay, Vikram, what we've discussed with you are the trouble points where you've lended in the past and some problems have surfaced up, NPA concerns are there. What I want to understand from you is that where are you lending now? Where are you confident that NPAs will not be a trouble point? Where do you think credit demand is coming?
Right now, credit demand in infrastructure is exceedingly low, and as I've said for some time now, new project development activity has actually stopped for some time. I think the areas that have been active have been, there's been some activity in the renewable space, but beyond that there hasn't been very much activity at all. So I don't see new project development activity pick up in a hurry till the issues that we're talking about get resolved, not only in power but also in roads and other areas, because there are a lot of disputes and claims and other things that still need to get sorted out with NHAI, etc. And so as that picks up, as that gets sorted out, construction activity picks up through EPC contracts, developers will then gain more confidence and cash flows to start bidding for new projects. So I think new project development activity is still a few quarters away, and as I said, we certainly expect roads and ports to pick up before power or any other area picks up. From a financing perspective, therefore, where we've been focused on low-risk opportunities for growth in terms of focusing on operating infrastructure assets where if there is an opportunity to refinance, those are some of the areas that we're looking at. But as I said, very little new project activity at this point.